your brakes just to make sure you don't fall asleep on me with my monotone voice. 11:30 a.m. to 3:15 p.m. Sorry, what am I talking about? Around about 11:30 a.m. and about 3-ish, we'll stop for breaks. This shouldn't even be on here. Phones off. Well, that doesn't apply to you because you are sitting at home in your pajamas, I would imagine. Normally, we do these in the Wealth Training offices just near Tower Bridge. And for those of you that have attended will know, but there's usually about 50 to 80 people in a room, and you can guarantee someone doesn't turn their phone off and it goes off. So we have great joy in taking the mickey out of them after having told them to turn the phones off. But it doesn't matter because you're at home. That doesn't matter because you're at home. I'm going to run through Darren's indicator settings for you. Now, if you're using Winway, these are all preset already. And on other platforms and some of the free software sites, you can just go into settings and add these in. Sometimes you'll see you can't add all of the settings. So if you just add the first lot, i.e. if there's 3 numbers, and it will only let you add 2, add the first 2 numbers that you see here. So RSI is 21 and 1. MACD is 5, 35 and 5. I will leave this up on the screen for a few minutes afterwards, so don't panic if I'm going too fast. CCI is 90. Stochastics 12, which is fast or short term, is 12, 3 and 3. Stochastics 20, which is longer term. They called it slow stochastics, but it's basically if you're planning on being in share for a longer period of time, you would use this. It's usually a little bit late, but it will keep you in a share for longer. Setting for that is 20, 12 and 9. Volume just comes as standard. Moving averages, Darren uses 10, 20 and 40, set to exponential. And basically that just means it puts more weight on recent data. Longer term moving averages, 50, 100 and 200, all set to simple. Oh, there we go. So I'll leave that up for a sec just so you can make a note. Hi, Angie. Yes, this is Rob. I hope you're well. She's saying sorry she's late. Unfortunately for Angie, we're just coming to the end of the session and we finish in 5 minutes. So you've probably missed most of it, but obviously I'm only joking. Okay, so Darren set me up with 2 small seminar trading accounts. This way, the size feels realistic when we're looking for a trade. A lot of you are starting out or in your early days of trading. So if we start going in big numbers early on, it's probably going to freak everybody out. So a small share account and a small spread bet account. And we have a running joke where it's my job to build it up and then Darren comes in and takes the money out, puts me back to square one again. So, and remember, no matter how great a trader you become, even the best traders in the world sometimes have down days. You know, you've got to understand that in trading, you have to lose money. It's part of the process. The institutions, for example, they're not looking at how much profit they're going to make all of the time. It's all about the risk. You've got to protect your capital. Your money management must be really tight, and we're going to talk about that later on. And I remember in the old days where, well, I'll tell you a little bit about myself. So I'm Rob Cooper, and I also did Darren's Apprentice course probably about 13, possibly 14 years now. My God, where does the time go? And so I sat in your position. I remember when I started, I had no previous experience, and I watched the first few weeks of videos and wondered what on earth Darren was talking about, highs and lows and indicators. I really had no idea. But I thought, right, well, I'm going to be good at this. I've paid a lot of money to do the course. I'm going to throw myself in and really study. And I've loved it. It's something you've got for the rest of your life. You can teach your family and friends. You know, you can do this anywhere in the world. a lot of you that I've done sessions with will know that normally in January, didn't happen last year, obviously, or this year even, I'll shoot off and go on a 4-6 week tour of Asia and Australia and all this sort of stuff. And the last time I went, I did a few trades in the lounge before I left, ran around for, I think I did 5 weeks. And when I got back, I'd paid for the trip. You can trade on a beach. I've sat out on the sunny island of Ibiza with a friend on the beach, and he's asked me what I'm doing on my phone. I'm not very good at sitting in the sun, so I get a bit bored. And set him up with a trading account, and I just told him to do the same as I was doing, and again paid for his trip. So it's an amazing thing. It's actually very simple trading. If you listen to what you're being told and you stick to the rules, it's a bit like driving a car. Once you're good at it, changing the gears, you don't even think about it. It comes naturally. And trading is very much, once you have the strategies and techniques from the trading floors, which you have got in your hands, and you stick to the rules, you've got to think of yourself as a computer program. If you had a set of rules, you action what you're going to do based on those rules, and you stick to those rules no matter what happens. The problem with trading, or the problem with humans, I should say, is with trading, everything we know as humans, trading is the opposite. So you will feel emotional. No one likes to lose money. I always say if you go to a supermarket and you drop £50 on the floor and you go home and you realise you've lost it, it's not a nice feeling. Well, trading is the same. You're going to lose money, but you've got to make sure it's managed correctly. You should be having small losses, managed losses, and you let your wins run. One of the big problems is people can't let the wins run because they're too emotional. So you really got to have a set of rules and stick to it. And if you do that, you'll see things all starting to change and your account grow very nicely. The important thing is that you are up, depending on what time frames you're trading, whether it's weekly, monthly, yearly. Personally, I always analyze my profit over 10 trades. I think that works really well. Over 10 trades, if you're trading correctly, you should be making money all of the time, every time you're doing 10 trades. And what it does, it gives you a bit of confidence, because the law of averages says you're going to get 3 trades in a row right, which is great. Obviously, you're going to let it run and earn some great money, but you're also going to get 3 in a row wrong. And that can be for a variety of reasons. Sometimes the share just goes wrong. I would say that probably happens 10% of the time. The other times it goes wrong, usually something will be affecting that share price. And that could be, I mean, Trump was great at pushing shares up and down. It could have been a Trump tweet. It could be negative news. Obviously, it goes the other way as well. It could be positive news and it flies up and you're in the long trade. Someone gets sacked, someone gets hired. All sorts of things can happen to that company when you're in the trade. So sometimes it can go wrong because of news. And the trick is this, and this really helped me in my trading. This is investing. So I've had people before, when they find out what I do, they say, "Oh, that's gambling, isn't it?" And I'm like, "Well, no, it isn't." And they go, "Well, yeah, it's gambling. You're just betting on this." And if you go to a casino and you gamble, there's only one winner, usually. You might have a few lucky days, but usually there's one winner, and it's the house. This is investing. And I always say it's very similar. I have a property portfolio. It's very, very similar to investing in property, I think, just a lot quicker. For example, if I see a nice property and the windows look good, I don't just buy it because of that. I'm going to go and do my due diligence. What are they selling for? What price can I get it for? Is it quite good value? And if not, I'm going to negotiate it so it is good value. Otherwise, I'm not interested. That's like looking at the charts. The chart is almost like looking at a house. You see a chart. Is it doing the right things? Is it at the right price? And then property investing, I go off and I get my solicitors to do due diligence, making sure they're not going to build a big supermarket in the back garden, and that everything is all in order from land registry points of view and stuff like that, to make sure that the property I'm looking at is doing all of the right things that I need it to be doing. And that's where the indicators come in. So with the charts, you look at the indicators and they tell you if there is strength or weakness coming into the price. So very, very similar. I mean, but the profits you can get from trading are much bigger, much faster, and it's a lot less hassle. I don't have to get my solicitors on the case. I don't have to run around talking to estate agents and making sure I'm the first in the queue, hopefully, that they ring when a new property comes on. So it's great, but in order to be a great investor, you've got to put the work in. You've got to make sure you're looking at the charts, looking at the right trends, looking at support resistance, waiting for the buy or the sell trigger, and we're going to talk about this today. And then make sure you're using the indicators to back up what you're thinking. You might see a great chart and the indicators are really poor. Well, you don't do the trade. And once you start doing this all correctly, when it goes wrong, if your trade goes wrong, the first thing I will do is a bit of due diligence. I will go online, I will put the company in and the date and yesterday's date, because sometimes the news comes out the night before, and see if I can find out why that share went wrong. And you will find probably 80% plus of the time what happened. Something happened with that share. You missed an earnings announcement, it was negative and the share dropped. And when you start doing this, because you put that little extra bit of work in, it really builds your confidence, because you'll be like, okay, it went wrong, but I can see why it went wrong, so I did it right. And what I do now is, if a share goes wrong, I don't care, which sounds crazy, but I really don't care, because I know I would have done it correctly. So if it goes wrong, it's a good trade, not a bad trade. And it's a good trade because it didn't do what I thought it was going to do. I'm out very quickly and I protect my capital. So therefore it's a good trade. You don't hang on hoping it's going to turn around and go the other way. You need to be out. If it does go back up, you've taken a small loss, you can get back in again. So never just hold on to a trade if it's going the wrong way, hoping it's going to turn around and go back the other way. It's almost like standing at a bus stop. You want to go left, a bus comes down the other side of the road facing the opposite direction. You don't jump on it and hope it's going to turn around down the end somewhere. It's not. It's probably going to drop you off in no man's land. So we're going to look at the UK 350, the NASDAQ 100 and the S&P 500. Depending on how we get on time-wise, we might have to look at the S&P 100. I'm going to go through as many as we possibly can. I'm going to give you a quick refresher of the basics. This stuff, all of you hopefully will know. Someone's saying there's no sounds. Can you hear me okay, guys? Yes, okay. So there is sounds, so it must be something to do. Well, it's pointless me saying it's something to do with your computer because they can't hear me anyway. But the sound is good, so that's fine. Okay, let's run through some of the basics. A lot of you would have done the 3-day courses, 4-day courses with Darren, and obviously be on the actual training course itself now. But it's good to have a quick refresher of these. Share selection. So when we're starting a session, this is the order that I do stuff in. So it's a good thing to have. Get this typed out or take a photograph of it and print it off. First thing I'm going to do is assess the markets. I want to get a vibe for what is going on in the markets currently. The US markets are sort of going sideways at the minute. We're not quite sure what's happening. I know on the NASDAQ we had a really nice head and shoulders pattern to go up. And then it's gone a little bit wobbly since. So we will have a look later and see what's happening. If the market is strong, normally I'm looking for up trades. If it's weak, I'll be looking for down trades. And then I would go off and scan the charts. And very importantly, what I want to try and do is make sure the chart of a company is not following the index. And the reason for that, for example, on a spread bet, if you're trading the FTSE or the NASDAQ or the S&P, the spread, the difference between the buy and the sell is 1 point. So if you bet £10 per point on a spread bet, your account will go 10 times the spread in minus. That's the cost. So it would be minus £10. If you're buying shares, you're going to get charged usually a fee to get in and get out. I know there are some companies that don't charge fees, but it's roughly about $8 to get in and to get out. But if we're scanning the charts and we look at an index and we trade a company that is following the index, so you might look at one of the companies and it's doing exactly the same as the index. Well, If that's the case, don't trade the company, because the company, the spread might be 20, 30, 40, 50 points. So if you're betting £1, you're going to go minus £50 before you even start. But if it's following the market, if it's following the index, well, the spread on that is only 1 point. So why would you not just trade the index? Because it's much cheaper. And the company is following the index anyway. So what we're looking for is companies that aren't following the index. They can be going up the same as the index, but we want to make sure the patterns that it's just done aren't identical. And if that's the case, we would just trade the index. We're going to draw in our support and resistance lines, our trend lines. And if we're scanning for charts, we're looking 8 to 10 months worth of data. And if we see something we like, zoom out 18 months to 2 years. And we want to make sure there's nothing in the way. We don't want to buy on a trend line if there's great big resistance just above where it's likely to stop. You need to make sure there's enough money from the trend to the resistance and that it makes sense trading it. You're going to look for chart patterns at base levels. So people get a little confused with this sometimes. If we're buying on a trend line, it can do one bounce off of the trend. That's fine, because you're trading in the same direction as the trend. If the trend's going up, it comes back to the trend and bounces. You're trading up and the overall trend is up. That's fine. You always allow fluff for that little bit extra. And you do that because even though there's been one bounce off of the trend line, a lot of the time it will come back and do a double bottom. And sometimes that second bottom is lower than the first bottom. Therefore, what that means is, I reckon probably 50% of the time that I get into a trade, and obviously I'm trading a larger account, it goes into a nice profit. If I'm looking at the monetary value, it would probably freak me out a little bit, because it goes into a nice profit and then it comes down, maybe back to the trend line to do a double bottom on the trend line, which makes it even stronger to go up. Or sometimes it retraces 50%, which is completely normal. When a share goes up, you expect it to retrace roughly 50%. So you could have I don't know, let's say you've got a smaller account and you're £1,000 in profit. The next day you could be down to £400. And if you're looking at the monetary value as a human being, that's a disaster. You should have taken the 600, especially if you lost some money the day before. You can't do that. Don't look at your phone every 10 minutes. Don't look at how much money you're making. Oh, well, obviously you're going to look at how much money you're making, but what I mean by that is stick to what the chart is doing. You're trading a strategy and a technique on the chart. Yes, it's great to watch the money, but it will go up and down. And 50% of the time, I reckon, you'll go into a loss after a profit at the start of a trade before it carries up going on. And the problem with that is a lot of people come out at that point because they panic, become emotional and get out of the trade. But if you're just looking at the chart, it's just doing its retracement before it carries on. Shares, to continue in one direction, will do a continuation, and usually a continuation pattern, and usually that is a retracement or a pause. Now at base levels, if we're looking at support and resistance, unless it's a tight channel and it's channeling really nicely, if I'm trading, if I'm going to go short at a resistance level, I need to see a reversal pattern. And that's because the share price previously has been going up. So I want to trade it in completely the opposite direction. So before I do it, I want to see a reversal pattern. Same at a support level. If I'm trading at a support to go up, the share has been coming down previous to that, I want to see a reversal pattern. There are exceptions. If it's a nice channel, and it's a nice tight channel, and you can see it's bouncing off those support and resistance lines with one bounce, you would use your stochastics and you can trade those with one bounce. But invariably, you will see two bounces or a reversal pattern, a double top or a double bottom, and that just makes it stronger. Indicators, if we're trending, we're using moving averages, MACD, CCI, and RSI. Oscillating for our channeling shares, and I'm pretty much using the fast stochastic most of the time, and that's the short-term one. And if you look at the buy and the sell signals, which we're going to see in a second, and you go back in time and see how they performed before, you'll see it's a very powerful indicator. And obviously, the longer-term stochastics 20. Which strategy am I going to use? You don't just jump into a trade because it's going up or it's done this or done that. You need to have a strategy. And the great thing about the course, and also the guys that are helping you out at the same time. There's various strategies and techniques, all very, very powerful. They don't work all of the time. Nothing works all of the time. So you've got to be careful you don't get your confidence whacked if one goes wrong. Get on and do the same again on a different share, and stick to the rules. You'll have the set of rules in front of you. If you're trading a certain strategy, don't mix the strategies together. This is something that people often do. I'll sit with a client and they'll be showing me half of a strategy and then half of another strategy combined, which sounds like genius, but it doesn't work. You've got to know which strategy you're using and you've got to stick to it. Wait for your entry trigger. So if we're going to go long, let's say it was coming back to a trend line, the share price, and the trend line's going up like this, we want it to bounce. And what defines the bounce is when the next day, if it hits the trend line, we want the next day to close above the previous bar's high. And what that does is it creates a bounce. And if we wait for that bounce, we've got a 70% chance of that going in that direction before we even start using the indicators. If we're shorting, if the trend is coming down and it's coming back to the trend line and we want it to bounce downwards off the trend line, as it comes to the trend line, I'm drawing a line on the lowest point of the bar that hits the trend. And we're going to see this later. And I want to see today's bar below the lowest point of yesterday's bar. That would be my short trigger. And it's basically you're trading the bounce. When to sell it? If we're trading on a trend line, I'll always draw the bottoms up for the trend and also the tops for the top of the trend or the channel. And if you watch what happens at the top of that channel, that's where the share usually reacts and comes back down again. So you buy at the trend going up at the bottom and you sell it at the top of the channel, wait for it to come back and you can trade it again. Or if there's a big resistance level nearby. Money management and stops, I'm going to make sure where I buy to where my stop goes comes within my money management, which we're going to look at in a sec. And I'm going to move my stops when the chart tells me to move the stop. I'm not just going to move my stops because I'm going to lock some money in. I will wait for the chart to tell me when to move the stop. And basically, I'm looking for the next retracement or pause. And I will put my stop under that if I'm going long, plus fluff. When to move stops, I've just covered that. I think that's it. Yeah, there we go. Now this, a lot of you will, well, all of you would have been sent this in your welcome pack. Probably one of the most important things in trading, I would say, which is why you're sent it in your welcome pack. And basically, when I started, there was no one-to-one sessions on the wealth trading course. You just got the all the lessons through on video, and you'd send your chart in once a month, and Darren would analyze it, and it was great. And I was very, very quickly taking money out of the market, which was amazing. And I was like, wow, this is quite special. But what I was good at doing is giving the money back. And usually I gave back more because I'd be quite willing to sit in it if it was going the wrong way and I'd taken off my stop, hoping it would turn up. I'd sit in that as long as I needed to. But in reverse, when it was going the right way, I'd snatch at the profits. And again, that's the human emotion thing coming in. And what I was doing, I was screenshotting my charts to put them into here. So when you buy a share, you put your chart in, make some notes of when you bought it, and then when you sell it, you put it in here. Well, I was doing that kind of. A lot of the time I would do the first chart and I'd have about 30 charts in a folder, and I'd go to start doing the trading log because I remember Darren going on about how important it was. And I'd get a bit bored. I'm sort of wasting my time here a little bit. I could be looking for the next big trade. I know what I'm doing. Why do I need to bother doing this? So I didn't. I would just delete 30 screenshots and think, okay, I'll do them from now on. I had a bit of a backlog there and I didn't really have the time to do it. Well, I carried on doing that throughout my probably first year of trading, I would say. And I was getting a bit frustrated because I kept giving the money back. So I knew I could take money out, and I was intelligent enough to know the reason I was giving the money back is I was doing something wrong. But in my head, I thought I was doing everything right. So I went back, I did all of the videos again. The great thing about the course you can go back and access that at any time. And you'll find that you've missed lots of stuff, simple stuff that can be big foundations of getting trades right. And this is one of them. So I went back and I was like, well, hang on a minute. I've got this trading log. I'm never really doing it. It doesn't have to look like this. You've just got to make notes. But this is a great template. So I started doing it. And it took a bit more of my time. And this is where your due diligence comes in with your investing again. Bearing in mind, this is not a get rich quick scheme. We're trading, we're investing. You've got to put the work into this. You can have some amazing money trading, but in order to do that, you've got to make sure you're doing everything correctly. So I started doing this, and I would go back and look at it 4 weeks later, 5 weeks later, which is what you need to do. And even though I had a great trade, maybe I turned 25% on a trade in a few weeks, and I thought it was amazing, and I took the money, and I was high-fiving my friends, telling them how great I was. When I went back and looked at the trading log, I realised that I would have earned 70% if I just carried on doing exactly what I was doing. I sold it too quickly just because the money was looking quite big, so I thought, well, I'll take that and I'll come out. So the only reason I sold it was because I had a nice chunk of money. Whereas if I'd stuck to the rules on the strategy, I would have earned so much more. So, and stops, I realized that my stops were always too tight. So I'd get stopped out. And usually what I'd do is I'd look at that trade for the next couple of days to see what happened next. And then I'd completely forget all about it because I was too busy looking for the next big trade. When I did this, I would go back and see I'd been stopped out. And usually it would be at a profit if I'd been in it for a period of time, or if I just got in, I might have been stopped out at a small loss. But when I look back for 4 or 5 weeks later, I couldn't believe how many times it actually went to my target, and I would have got a really decent profit if my stop just hadn't been so tight. And it really taught me, okay, well, look, if I just moved my stop a little bit lower on that retracement, it came down, it did a double bottom, as we were saying earlier. The second bottom was lower than the first, and they call that a shakeout. The institutions can see orders sitting in there, and they trigger these orders, and then they go and do the opposite thing. So it will tell you so much. I can't tell you the importance of doing this. You must, if you're serious about trading and you're serious about earning some great money, getting back the cost you've paid to do the course and going on and doing amazing things, you must do this. If you don't do it, you will struggle. I was making the same mistakes over and over again. I didn't even realize I was making them until I did this. So there's a lecture for you. Okay, we're going to have a quick run through of the indicators. How are we getting on time-wise? Okay, right, moving averages. Very simple. I've got 2 lines here. Most of you will have 3, sometimes more. You're looking for, these are trending indicators, moving averages. So if the share is going sideways, you can't use them. It's a common mistake. It must be trending. And the sell signal is they cross going down, and the price is also going down to confirm it. So on here, for example, if you had shorted here, you could stay in it until they cross going back up. You would have had a great trade all the way down. I mean, that's how you can use this indicator. Wait for the cross going up, and then you can switch and buy, stay in it until they cross going down. We're going to be a lot more advanced than that, and we're going to lock in better profits along the way. But that, as a basic, is how you use the indicator. So buy signal is crossing going up and price going up. CCI, we have 2 lines here, the plus 100 and the minus 100 in brackets. If it crosses down over the plus 100 is a sell signal. And you can see quite nicely, off it goes. If it crosses down over the minus 100 is also a sell signal. So wherever they are sell signals. But the lower it gets here, you start getting into oversold territory. This is where it starts thinking about going back up. But you can see here, it went sideways for 2 months. And then a buy signal is when it crosses going up. We had one here. So it gave us a buy. The share price went up, but it got to this trend. Look, it tested the trend and couldn't get through. Collapsed, cancelled out the buy with a sell and carried on going down. RSI is the same, but with 1 signal line, the 50 line. Crossing down is a sell, crossing up is a buy. And same thing happened again here. And what I would do is I would use these two indicators together. I'd wait for a sell on one, I'd wait for a sell on the second one, then I would trade it, because I knew that then I had more of a chance of that going in that direction. Again, very basic way of using it. So MACD, this is great to cover this slide because the amount of people, they get slightly confused on this. One of my favorite, or probably my favorite indicator when it does a certain thing. And basically how you use it, if the share price is trending up, you look above the zero only, this zero line here. If it's trending down, you look below the zero line. And how it works is this. One peak doesn't really give us too much information. We're looking for the next peak to tell us on this upward move, is momentum dropping off or picking up? And we can see here it's dropping off. Now that's fine. And when it does a retracement, normally you will see it drop off. But what we want is for the next peak to be going upwards. And that shows us that even though it's just done a retracement, the momentum is picking back up. If you get 3 peaks getting smaller like this on an upward move, this is a 3-peak MACD divergence. Price is going up, indicator is diverging away from the price. Now, just from experience, and I can tell you this because every time I've seen one of these, I would write on the chart divergence, forget all about it, and then see it weeks and weeks later. And I was astounded to how powerful this indicator is. If you get a 3-peak MACD divergence, that's weakness and a turning point. And if I follow this up, you can see you had a few days notice before it dropped. And that's what tends to happen. You normally get a few days notice. So you might be saying, okay, well, this is a nice trend line. I'm getting ready to buy it. If we haven't seen this yet, this is all looking really strong. But this would stop me buying it. And where I would have bought it, I didn't because of this. And I would write on the chart, MACD divergence. And I reckon 90% plus of the time when you see this, the share price turns or you get a decent retracement. So here it actually went down for a month. Look. Now, if I draw a line from here to here, we can see the momentum is picking up. If I draw a line from here to here, it's trending up. We're not looking below. And we can see it's picking up momentum and off it goes. Here we get that pullback again. On the second peak is lower. So it's been going up and up and up. Now it goes lower. And we can see that's this retracement. Well, that's fine as long as we don't get 3 peaks getting smaller. And you can see here, it does what I was saying earlier. It picks up and tells us the momentum is good on the upward trend. Now, in reverse, on a downward trend, so we have a downward trend from here to here. I use this indicator, as a lot of you will know, to decipher if a share price is more likely to bounce off of a trend and go up or go down. And this is pretty amazing when it comes to doing that, because I've told you about this 90% plus weakness divergence. This is the opposite. Price is coming down. Indicator is going to meet the price. This is a convergence. They're converging together. Well, a divergence is a sign of weakness. A convergence is a sign of strength. So when I saw this with 3 peaks, 1, 2, 3, it's a 3-peak MACD convergence. Well, 90% plus of the time it's going to go up. So if you can work out when you're on a trend, if it's likely to go up or go down, you're going to make money. It's as simple as that. We can see here, off it went. Stochastics, great indicator. I love the stochastics. Really amazing for day trading as well. On any time frame, 1 minute, 10 minute, hourly, monthly, whatever you're looking at. This is Stochastics 12, which is the fast stochastics or short term. And how it works, if it crosses going up is a buy signal. If it does it in the 20 area, so 16 is here, so 20 is a bit higher, that's a really good buy signal. It's a strong buy signal. If it crosses lower than 20 going up, that's even stronger. And the sell signal is when it crosses going down in the 80 area. And again, if it crosses higher than 80 going down, that makes it even stronger. And we can see here we've got a lovely channel. At the buy signal here, what happens? It goes up. At the buy signal here, what happens? It goes up. So when you get the next buy signal here, you can see off it goes. Loads of people got in at this point and off it went. Now, I will trade a channel up and down. This one I didn't. And this is the same for any indicator. You should always just check what the indicator did in the past on that particular share. And you'll find some indicators work an absolute dream and others work in a certain way, but not in another. So you would only use them in the correct way. And here, the buy signal was great. Sell signal was great. Here, look. But the last time it went down, this is still a sell signal, but it's in this area. So even though it's still a signal, it's not as good as if it was up here. And we can see it actually happened halfway in this move, whereas this happened as it went down. This happened down here somewhere. So when I saw the next sell signal, even though it was in the 80 area, I wouldn't have actually used the sell signal because it was a bit weird here. If this sell signal was up here and it did the same thing, it gave me the signal as it went down, then I would buy it here, sell it at this resistance, wait for the sell, I'd short it, sell it at this support, or buy to cover at this support, buy again and go up. So I would trade it up and down on the basis that the indicators have been good before every time. Right, a couple of things that will make a big difference to what you're doing. And just pulls everything into a tight-knit order for you. Pretty much on every share that I trade or index, I'm going to wait for a retracement or a pullback. If you do that, and that's when it bounces, retracement, pullback, bounce, all the same thing. You're waiting for it to come back to a level and bounce back off of that level. If you think about it, every reversal pattern, pullback or continuation, trendline bounce is a retracement. If you've got a double bottom, one bottom is a retracement. Well, it's not a reversal pattern yet, but when it does the next bottom, it creates a reversal pattern. Head and shoulders. If you've got a big peak in the middle, the first thing I do is I look either side. Can I see two smaller peaks? That would be my head and my shoulder. And the second retracement on the shoulder creates the reversal pattern or completes the reversal pattern. It stops you getting into the trade late, and it gives you excellent money management, because every time you get into a trade, you should be putting your stop under the retracement plus fluff, the lowest point of the bounce plus fluff. Or if you're shorting, highest point of the bounce plus fluff. The next thing you should do is buy or short after a retracement at a base level. Support, resistance, you're going to wait for reversal patterns at these. Trend lines and moving averages, you can wait for one bounce, but be ready for the next one because it might come back and do another bounce at a similar level. Moving averages, the same as a trend line, just a bit wobblier. Continuation patterns, these are all mini base levels. Ascending triangles, pennants, bullish flags, so on and so forth. Right, okay, give me one sec. Okay, cool. This is what defines the bounce. We're waiting for the next day to close above the high of yesterday. So if there's a trend going up, this comes back to the trend line. We wait for the close above the previous day's high. And study that. When you see that, watch what happens afterwards. If this doesn't happen, there's 70% chance of it going down, not up. If you're shorting, same thing. Here's the trend line, back to the trend line. This time you draw a line on the lowest point of the bar. So if this had happened anywhere here, that would be my short trigger. That's when I don't check the indicators until I see these triggers. You don't need to look at the indicators. Take them off the chart. Keep the price nice, the price chart nice and big. And then when you get the buy trigger or the sell trigger, this could be a reversal pattern, single bottom, double bottom. This could be the second shoulder on a head and shoulders. And then your stop goes at the highest point of the bounce plus fluff, or the lowest point of the bounce plus fluff. Money management, we'll do a quick bit on this. Let me just double check you can still hear me. Guys, you're asking me loads of questions here. we're going to do a Q&A at the end. If I start answering questions, we will get completely sidetracked. Okay, money management. Shares. If we're trading over $10, the maximum risk is 5%. That doesn't mean you put the stop at 5%. I've had that before where I've looked at a client's chart and I said, why have you put your stop all the way down there? And they said, oh, it was 5%. The stop goes underneath the lowest point of the retracement or the bounce plus fluff. And then you make sure it's not more than 5% from the stop to the price you're buying at. Sometimes it's 1%, 2%. That's great. I'll increase the amount of money I'm trading if I get that. Between $2 and $10, your cheaper shares. We might even do a scan on these later today because I really like trading these. There's some really big profits on these, but you've just got to be very strict and very regimented. Maximum risk will be 10%, but must have 40% plus profit potential, ideally 50, 60, 70%. Spread betting or CFDs, over $10, 5% of the total capital. So with the shares, you know, if you were doing £1,000 worth of shares, your maximum risk would be £50. But with spread betting or CFDs, it's of the total capital. So if you had £10,000 in your account, you wouldn't risk more than 500 on any one trade. $2 and $10, maximum 10% risk. And this applies again. Must have 40, 50% plus profit potential. Don't trade under $2. It's too risky. And that's just because the percentages are much bigger. So that whole penny shares thing, you hear these amazing, wonderful stories of how somebody's made so much money trading penny shares. They're the tiny minority. What you don't hear about is the disasters that everyone else had. And I've got a friend that used to do this. If you think about it, if a share goes from, I don't know, 5p to 2.5p, it's a tiny move. You lost 50% of your capital. So stops, we've spoken about that. They go underneath or above the price retracement plus fluff. When do we move the stops? The chart is going to tell you. You wait for the next bounce or pause, then you move under that plus fluff. We'll do a little bit on the psychology, seeing as the human emotion side of trading is usually the hardest bit, I think. I still get inklings to do something wrong because I feel, oh, actually, I should do this. And then I'm like, no, what am I doing? That's completely opposite of the strategy or the technique I'm using. So fear and greed, two big human emotions. Fear in trading leads to small winning days and big losing days. And we spoke about that earlier. People snatch at the profits and they're quite happy to let the losses run because they've gone in so deep now, they're hoping it's going to turn around and go back up again. Disaster. Take the hit, take the loss, come out. It's going to be managed. Think of it as a good trade, not a bad trade, because you did it correctly, hopefully, and it's not doing what you thought, so you're out. If it does go back up, you can just get back in again. You don't need to sit there and watch a big loss happen just because you didn't want to take a smaller loss in the first place. Taking the profits too soon, you know, as it retraces, we spoke about this earlier, it's going to retrace possibly 50%, sometimes more. Well, that freaks people out and they end up taking a small profit and you never get to where it's going to go. You never get to that resistance level or that target you were going to sell at. It's one trade out of many. Do not panic if it turns against you. If you gauge it over 10 trades, you could get 7 trades wrong, which would be pretty terrible, but you'd still make money if you were doing it correctly. So once you're getting 50% right, 60, 70, 80% right of your trades, and the ones you do get wrong are tiny losses, you'll see everything start to turn. Fear of taking the profits, another bugbear, gets to a resistance level. You've earned a big chunk of money. You've grown fond of the share. You think this was amazing. And everyone's saying amazing things on Bloomberg and CNBC about this company. It's still going to fly up. If you don't take that profit at that resistance level or the top of that channel, that's usually where it comes flying back down. Usually goes down quicker than it goes up and will wipe out your profit quickly. So make sure when you hit your target levels, you take it. That's great trading. Money in the bank and then go and look for new entry points. Fear causes a trader to enter the trade late. I know a lot of you are going to be nodding your head when I say this. You see a share, you know you're supposed to get in at that point. Maybe you lost a bit of money yesterday, so you're a little bit nervous. You watch it, off it goes. Next few days you're watching it, and it keeps going up and up and up. You're working out how much money you would have made, and you're kicking yourself. And then you think, I can't handle this anymore. Everyone's saying great stuff about this. This is really going to fly. Right, I'm going to get on it. And they jump on it. It's gone up for 4 days. They can't handle it. They jump on it. And I can't tell you how many people say to me, why is it if I watch a share, it goes up and up and up? But the minute I buy it, literally within an hour, it turns around and goes the other way. And that's because they're buying it at a level where it's likely to turn. If it's gone up for 4 days without retracing, what do you think it's going to do next? It's going to retrace. So of course it's going to come back down. So if you miss the entry, you've missed it. Be patient, wait for the next one. Stick to the rules. That's the big one there. So, okay, cool. What we're going to do, let's get on and let me just check something here. Yeah, I think that covers it all. That's all good. Okay, let's get on and start looking at the markets. We're going to go through the UK 350 first. Let me just double check you can still see and hear me. Can you hear me, guys? Sorry, I'll keep doing this just to make sure. Yeah, wonderful. Good stuff. Right, let's do this. So what we're going to do, and look at the UK 350. This is the FTSE. If you're on Winway, it's ISF hyphen, which is the dash LON. And we can have a quick look at what's been going on. So this is obviously the big COVID drop. You can see it's done its Fibonacci retracement. Oh, that's definitely not it. Here to here, you can see it comes up about 50%. Now, I think the whole world thought that this was really going to tank again at this point. You know, with the big COVID drop, it shot back up. This is a great, and it did actually go down on the FTSE, and we had this downward trend like this, something going on like this. But a lot of the American shares just went back up again, which was crazy. Everyone was really expecting this drop, and it just shows you, don't try and second guess the market. Go with what the market is doing. You know, if it's on a downward trend, wait for the retracements and trade it downwards. If it's going up, trade it upwards. Simple as that. So here we can see we've got this downward trend. It looks like it's just nudged above it. And it's come back to this trend line. If we get a bounce off the trend, this could be getting ready to go up. And let's go and have a look at a live price. And here we are. This is what is going on right now. Oh no, that's Facebook. There we go. Okay. So this is a daily chart. Each one of these bars is 1 day. Sometimes if I see a big move like this, I might go in on a 4-hour chart, a slightly smaller time frame. Here we can see we've had quite a big move up here. So what is it likely to do after a move like that? Well, it's likely to retrace. So the FTSE could be tradable, but we just want to see. I want to see it come back a bit first in the 4-hour. Now, if you see great big wicks like this above and below, that shows a lot of indecision. Here we can see it shot up really nicely and it actually finished, the candle finished much lower here. Then it carried on going down. It's hit this trend line at this point, and now it's shot up. This would have been a great entry at this trend. On the daily, we can see the indicators are pointing up. It looks like it's getting ready to go. like so. It looks like we could be getting ready for a push up. And again, this is a level I would sell it. What happens at this level? It comes back. So I'd be looking to sell it probably a bit higher than that. Let's see what's going on. Up here somewhere. There's a big figure here, 7,000. I'd want to sell it before that big round number. Could come back and do a double bottom here before it goes up. So if you trade it here, if this nudges up a bit today, then we've got the bounce. You can see here. Now, I can go to a 4-hourly and wait for a retracement here and get in, which means I'm going to be a bit higher up. But if I do that, I'll stick to the 4-hourly. Here we've got a possible big head, shoulder. So if we do get that second retracement, it creates a reversal pattern as well on the 4-hourly chart. If I get in on a 4-hourly, which I'll often do, as opposed to a daily, normally I'm trading daily bars. Swing trading daily is without doubt the most profitable way of trading. If you're day trading, you're putting out some great profits. They're all on these tiny little moves. So if you get this great big move up to here, you know, here we've got 280 point, 2,800 point move from here to here. No, what am I talking about? Sorry, that's rubbish. 280 point move. £10 a point, £2,800. You can see that there's plenty from here to here. It's going to bounce around as it goes up. If I get into it here, it might come right back down to do a double bottom here. It might even come down a bit lower. We've got to be ready for this stuff. Okay, so we can see we're trending. What's happened before on the FTSE. I'm remembering all this kind of stuff. And what I'm looking for trending shares. That's great. It looks like it's pretty positive today. We're getting a lot of buy signals. The stochastics have just crossed going up. It could be getting ready for a push up. Looks like it might retrace first a little bit before it does that. But it's looking good. So we just want to make sure we're not trading something that completely follows this. And shout at me if I do go to do one. So normally I'd print this off. In my earlier days, I'd print this off, have it next to me, and just make sure the company isn't identically following this. If it is, you might as well just trade the index. So, okay, cool. Let's save that. And I'm going to go to the UK 350. And again, we're looking at 8 to 10 months worth of data. If you've got loads of mess on your charts like I've got here, clean them off. Keep it nice and tidy. Unless they're still relevant to what you're looking at, of course. This is just going sideways, so it's not of interest. 8 to 10 months worth of data. And what I'm looking for is basically, is the share price trending up or down, or channeling nicely. So here it's trending up. This could have been an entry here. You can see off it's gone, but we've missed it now. Don't jump on it just because it's gone. You've got to wait for the right entry. Got a nice big glitch on the chart here. I don't know what's going on there. And what I'll do is I look at a chart and I'm drawing in the trend lines. Usually there's a trading channel, something like this. When it gets to here, it's normally where it reacts. So this looks quite interesting straight away. So I would draw the top on here. We actually got a buy trigger here, and then it's gone down. So let's just check the indicator, see what's going on. Okay, so the indicators currently are a little bit mixed. I'm going to go and look at this live. Let me show you what I mean. If I'm looking at a trend line bounce, this, if it bounces here, is higher than this one. Every time there's a bounce on a price, you get one on the indicator. And what I'll do is I'll compare this to the last bounce. Or if there's a reversal pattern here, I'll use the reversal pattern instead. So here, this bounce is here, and if I draw to where we are, you can see it's slightly going down, probably neutral. Well, that needs to be going up. If the other indicator is going up and one is neutral, I'll still do the trade. What usually happens is one of the indicators will follow it. It lags behind a little bit. So the other one's got to be good. So currently this is good, but we are pointing downwards here. Can you see? So I'd want to see this going up. If it goes up, it creates a double bottom on the indicator as well. Stochastics could be getting ready to go up. What happened last time we got a buy signal? It went up nicely. Okay, here, what happened? We got a buy signal here, it went up. We've got a buy signal here in a higher area, so not as good. It went up. So you can see how well it works. When it crossed going down, it went down. So I wouldn't trade this down because the trend is predominantly up. So that's where we are. So we're looking for that to push up a little bit today. What I will do, I'm sure most of you can see the ticker here. I will read the tickers out to you if I think they're relevant. I'm not going to read every ticker out, we'll be here all night. But what I want you to do, I've got this in front of me now. Hopefully you've got a pad. Or if you're really technical, you've got some Word document set up, ready to go. I like to use a pad. I'll put these in my watch list on my platform. But on my pad, I've got a line drawn down the middle of the page, and I've got up on one side and down on the other. And what I will do is all of the tickers that look good, I'm going to put into this watch list. I'm going to shout them out to you. You're going to do the same. You can have an amazing watch list. It doesn't mean you trade them. When they come back to your point of interest is when you're interested. You're just going to have literally, we're probably going to have, I don't know, 50, 60 trades, I would imagine at a rough guess. They're all tradable. When they get back to your point of interest, then you're going to make sure you get the bounce and the indicators are backing them up. So here, for example, we get the bounce here. Look, it comes back to the trend. On this day, this is an example, it closes above the previous day's high. So when it hits the trend, as long as it's still near the trend, you're waiting for the bounce. Now this does exactly what I was explaining to you earlier. It goes up into profit, puts you into a loss. What it's doing is a double bottom here to go up. Your stop is going to go here. Lowest point in the bounce plus fluff. You're in here, profit into loss. Don't panic. It happens a lot. It's part of the initial setup quite often. Sometimes it just flies, but it will happen quite a lot. So here it goes up, comes down, off it goes. So now I can move my stop onto the next bounce. Off it goes, bounces again here. I can now move my stop to the bottom of this bounce plus fluff. I'm selling at the top of this channel. I would have sold it up here somewhere. So it goes up again, bounces here, but I would have sold it here. So we're waiting for this to do the same thing. And if you watch what happens at a trend, you'll see these big moves off the trend line. So let's go to a live chart and go back to ticker is AAL on this one. And here we go. We've actually got the trigger right now. So we found a trade straight away. There you go. So we can see this is the bounce we're looking for. We could have got in the day before here as well. And our stop goes under here. So put this into your up list. Ticker is AAL. And that's a UK share. Now what I'll do is I'll put a couple of stars next to it, which means we're going to trade it now. So it's looking good. Look at the indicators on the daily. We've got buy signal here. Everything is pointing up quite nicely. RSI, we're not quite sure what's happening. Let's have a look. Yeah, we just got a buy signal on the RSI. Be careful when you've got the indicators squashed like this because you don't get the true reading. That's all. But this looks good. I'm going to draw the channel in at the top. I hope. What's going on? The computer's having a bit of a meltdown. Something like this. As the share evolves, initially my exit is going to be here, but as it evolves, it usually ends up a lot higher. But this looks good. This looks nice. We could do this trade right now. I think what we'll do, let's plow through all of them first, and we'll go back and do the trades that we like. But yeah, it's looking good. So I'm just going to check the indicators again on here. So if you remember, the CCI was neutral. Now it's popped up. This is obviously going to be going up. RSI, we're now going to get that double bottom, which we've just seen. So it looks good. Let's go to the CCI, enlarge this. We can see it's pointing up quite nicely. Good. Okay, that's nice and easy. Right, so let's carry on. We'll actually create a new watch list. Have I done that already? No, let's do a new watch list for today. Okay, see that in the watch list. Now, I normally take the indicators off when I'm looking at the chart, just to make the chart, just get a bit more information. It's a bit easier to see what's going on. Okay, so not quite sure. Sometimes you'll get a mad glitch on the chart. There is a way of sorting that out. Again, clean up all the old bits and pieces. I'd say we've probably got something like this, but I'm not sure what's going on here. It's sort of gone sideways, popped up, coming down. Is it getting ready to go up? I don't really know. This is Admiral Insurance Group. I'm going to put it into my watch list just to watch it at a later date. I'm not quite interested now, just because it's a bit all over the place. If I draw in my trading channel with something like this, I'd be buying it here and selling it here. So it might sort itself out a bit later on, but it's not. It's just a bit too messy right now. But the ticker is ADM for mother. No idea what's going on here. Some crazy stuff. It's almost like a bullish flag. We don't really know what's going on. Steer well clear of stuff like this. White knuckle riding. What's happening? I have no idea. And you've got to be careful you don't try and convince yourself that the chart is doing something. Boredom trading is a big bugbear where people will go in, spend an hour looking at charts, can't see anything, see something that's not right, but convince themselves to do it anyway because A, they want to watch a share, they want to be in a share, so they do it anyway. Well, you might be lucky a few times, but you're going to lose money most of the time. This is your hard-earned cash, so make sure you're sticking to the rules and doing it correctly. Okay, so I'm just looking at this. Back to the trend, I'd be interested. As a share, I want 10% ideally. I don't mind earning 5 or 6% if my risk is 1%, and I'm going to do it in a short period of time. Done a double bottom here. It's likely to come back now. Look what it does at this level. Okay, is there enough in it? Probably not. If there's not enough in it from a share point of view, and all I'm doing is I'm working out, I know 10% is 90. So I want it to go to 998 for 10%, which is up here somewhere. If it bounces off this level, and it would be here, look, it bounces on this day, does exactly what I was saying earlier, comes back and puts you into a loss, and you're selling it here. Quick, easy trading. Some nice profits. When it comes back into it, I might trade it up as a spread bet if I'm not getting 10% on a share. Actually, ticker for that is AGT, but it's not going to be ready until it comes back to the trend line. And that's what you watch. This is going to be made up of waiting for it to come back to the level of interest before you do anything. Nice trend up, bit crazy, not quite sure what's happening. We can find better ones than that. Here we've got this trend going up, and again it's just jumping around a little bit, can you see? So I'm going to steer clear of it. So here it's broken through the trend, push back up again. If it goes up, we could get a move up on this one. There's no obvious reversal pattern here. It's just done like a little pause, like a continuation. It's broken out and done that continuation move. Let's just have a look at this live. Ticker is ANTO. I put this in my watch list. Okay, you can see if my trend line wants to work. So it has broken through, pushing back up. So actually, it's looking pretty good. Hasn't closed above yet. It's nudging up quite nicely. Let's check the indicators on here, see what's going on. Okay, slight cause for concern here. You can just see that this is gathering momentum to the downside. Okay, so I wouldn't do this trade. So this is neutral, and this is down, can you see? So this is higher than this bottom, but on the indicator it's lower. Now, it looks like it's going to correct itself. And a lot of the time, if you get a big push down on a share price, it will do this and push the indicator out. That doesn't mean you trade it, but it means you allow for it. If this starts coming back up today, we could be good. What I'm going to do is go to investing.com. This is a free platform, but you can look at live prices. Let's see what the indicators are doing on here. The ticker is ANTO. So here we can see what the indicators are doing right now. Have they corrected? So let's have a look. Okay. Well, we're sort of neutral again, but we can see we're heading up. Let's look at the... Okay. So you can see it's actually correcting itself now, and this is starting to go up. So you can see we've gone from not being interested to possibly being interested. I'm going to draw it in on here. I'm looking for the most touches. So what that does mean is I'll cut through a bar if I see there's more touches in a certain place. It looks like it's trying to make a bit of a comeback. So this could be a good trade. It might be a trade for later on today before the market shuts. Or it might be a trade for tomorrow. And a lot of these trades we're going to see might be tomorrow or the day after. But we will talk about those. Okay, on this downward move, if I'm looking at the MACD here, I'm looking below the zero line, and we can see this also looks like it's starting to converge. Can you see? This is going up, showing strength. So it looks like it could be getting ready to go. So what we're going to do, put that in our watch list, ANTO, put 2 stars next to it. And what this does is just fine tunes my time. I don't need to go through my whole watch list every time. Once I've done a scan, I can go to the watch list and just look at the starred ones. Saves me loads of time. I literally spend probably half an hour a week looking at my trades or looking at potential trades because I'll have a nice watch list in place. Okay, cool. Not as clean as like here, it comes down quite nicely. And we get this move. We get this move again. This little pause here could create a bit of a problem though, so we need to keep an eye on that. Okay, I'm going to speed things up a little bit. Lovely trend up here. The steeper the trend, the more easy it is to get broken. And that's because it goes up very quickly. So profit takers start coming and taking profits. You can see here, if I draw this in, not quite sure what's happening here. I want to see it back at this level, trade it from here to here. Same thing on the way down, you also get your trading channels. And here we've got quite a nice sell signal. Just looking at this level here. Yeah, it's probably something you need to be aware of. A lot of the time it will just smash through that. They did here, look, and here. But here we've got the sell trigger. It closes below the bar of yesterday. Ideally, I'd want to see it here, so I have a nice tight stop. So the entry point is here for a short trade. You can see it bouncing off, and you hope it's going to do this. And you're going to move your stop on the way down on the retracements or pauses. exit is going to be down at this level, just above here. Always sell it just above the channel, because institutions will sell it before it gets there. But just got to be aware of this at the same time. Is there enough money in it? So I know I've got 40 would be 10%. So if it goes down to 425, it's a 10% move. That's good. Let's have a look at what's going on here. Okay, this is good. We can see it's heading in the same direction. Just giving us a sell signal. I'm just looking at these tops compared to this. This is a bit higher, which is a sign of strength. But we can see it's starting to head down. Stochastics has given us a sell. What happened before when we got that? Here, that sort of went sideways, went up, and then came down. Here. Came down, and then went up. So the sell signal hasn't been great on this. This is a good tool. The VIX Fix. I quite like this indicator. When it shows me it's turning up, is normally when a share comes down. So it does it here. Let's see what happened here. Did it work? Yeah, so it turned up, the share did come down and then bounce back up again here. So here it's turning up, it came down. So we're getting that now. It looks like it could be getting ready to come down. Let's have a look at it live, because this is last night's data. Oh, hang on. Yeah, this is last night's data. So we're going to go in, look at this live. The ticker is AVST. Okay. So now the markets are quite strong today, pushing up quite nicely. It's we're actually getting a better price. This is cool. Stop the go here. It might be coming up now to do a double top here. A lot of the time you'll see it in the past. It hasn't done it here, but you'll see the reversal pattern. But this could be a good short trade. We just want to see the indicators are starting to kick up a bit, so we just need to see them going down. We'll watch this later today. If it goes up further, then all I would do is I'd wait for the next bounce down, because if it's going up, we don't want to try and short it. And wait for the, maybe tomorrow it closes below, or it might even, if it stays here today, I'd be okay. But if it does pop up later, then I would wait for it to bounce again. And it might be coming up to a double top. So put this in your watch list. Short trade with 2 stars next to it. Hopefully that's all making sense. But you can see the moves you get off on this trend line are fast, quick moves, nice 10%. How long does it take? Could be 5 days, could be a couple of weeks. So, not sure what's going on here. Okay, this is AstraZeneca. There's some news going on with this at the minute. Currently, it's trending back up to this level. We're not quite sure what's happening yet. I need to see it break below here before I shorted it. We've got a trading channel coming down like this. And this would be a short trade here. Comes down, bounces, stop, selling here. So we will put this in our watch list for a short trade. We're only going to be interested long, even though this is looking pretty strong, when it breaks this area and bounces. So AZN is the ticker. Okay. I've traded this in the past. I'm just trying to work out what on earth is going on now. It's a bit haywire. It's sort of trending down. Is it doing a channel here? We're not sure. But you can see not really yet. If it was down here, we could be interested to trade it up. If it was up here, we could be interested to trade it down. In the past, we've had some quite nice moves. Now it's sort of jumping around a little bit. So do I put it in my watch list? Yeah, I will do for later down the line. Ticker is BAB. I'm not sure if it's long or short because it depends where it comes, if it gets to here first or if it gets to here first. Let's put it in the short list, BAB with a question mark, because that could go either way. So we can see this channel going up, like so. It's at the top of the channel. That's where it normally comes back. I'll be interested if it comes to here. This is Barratt Developments Construction Company. Is there enough in it? Is my next question. Well, I know 69 is 10%. So yeah, there's a 10% move in there. Okay, cool. Again, this is not going to be ready for at least 4 or 5 days next week, maybe even the week after, if it even comes back to that level. But if it does, we're interested, then we analyze it. So long trade, BDEV. I wouldn't even put a star next to that because I know it's pointless me looking at that in the next week, probably. This is one from one of the last live day, I think. Is that right? Yeah, this is Beasley. Oh, actually, we'll go through the trades from the last. I should make a note of this. The last live day as well, just to see how you got on. Right, just make a note of that. But this one here, we shorted it on here. It came down, started to go a little bit wonky here. We're still in the trade and sold it on this day here at 316. And we'll talk about that in more detail later when we go through the trades from the last session. So here, what's going on? Well, we've got this sort of trend going up. Not quite sure what's happening. Some weird, is it starting to consolidate? We don't know, but we're not interested. It's in no man's land. This is quite interesting. Got this great big trend going up. It's broken it and bounced. This would have been a good short at this point. Probably missed it now. We're waiting for the next retracement. I'll be zooming out to see what's in the way. Probably a level here. Or we sell just before it gets there. Okay, we can find better trades than that. Again, clean up all this old stuff, keep the charts tidy. If you're using Minway, I know some of you have got the auto extend on the trend line. Turn that off, right click on the trend, properties. No, that's not right. On the actual trend itself, global properties, right click, automatic extension, untick this price block. Because you'll probably find that your shares are doing this. What happens is later on you get loads of crazy lines everywhere. So if you right click on the trend, global properties, untick it, then when you draw your trend, it stops where you stop, and if you want to extend it, you can right click and press extend. It's going to simplify what you're doing. Okay, craziness here. This looks like a head and shoulders, but it's just jumping around everywhere. You're just probably going to get stopped out. So this is trending up, but we've got a bit of stuff in the way, a bit of a resistance. It's going a bit haywire. Don't forget, if you see it, if a share gets erratic, it's normally the end of a trend. Okay, let's have a look at this. I would say something like this is going on. So it's broken the trend. It's just a bit wonky, so we'll steer clear of that. We can find better trades than that. Got head and shoulders here, a bit of a wonky one, but stuff in the way. It's a bit messy. I can't quite see. It needs to be really obvious what I'm looking at. And what we'll do, we'll take a break shortly. This is a lot cleaner. I like this. This is BP. We've got a channel going on like this. Let's have a look at this live. So ticker is BP, London. Okay. just going to check this. It's a little bit off this trend line, so I just want to double check. Yeah, I'd want to see it a bit closer. It looks like it's going to go up. If it was already going up and bouncing, I would trade it as a continuation, but it's on the way down. And we had a really bullish doji here. Can you see it open and closes here at the top? So it went down, the buyers came in, pushed it up. It's starting to nudge up. So it looks like it's going up. And it is nice and clean. You can see here. But I just want to sit a bit closer to this trend. And I can touch this and join it up. So that's distance-wise, that's probably all right. But just I like to see it a little bit closer. But we will put this in our watch list. BP as a long trade. Put 1 star next to that. And you'll notice when we look at the American shares, like the UK ones jump around a bit more. A bit more volatility going on. So this is a trend line. It's a bit. This made me hesitate a bit. What I found is, if I hesitate when I'm looking at a share, it's normally not right, because if it's right, you'll know immediately looking at the indicators in the chart. If I hesitate, I'm normally trying to convince myself to do it, is what I found. So it's come back to the trend. It's a little bit haywire here, but it's nice and clean now. If we get a bounce back up off of here, could be interesting. The ticker is CBG. Okay. Let's just check the share price. There's some craziness that's going on here. Let's have a look. And you'll find sometimes, I've been using Moonway for years now, so sometimes, CBG, that's one, company name change. So here we've got this 47. I can check the share price here. Okay, so this doesn't look right for some reason. Okay, I can't work out what's going on, so we're just going to ignore that. Not quite sure what's happening here. Is it a downward trend? Have we got something going on like that? Nice double top. I want to see a retracement now. I'm going to draw in where it could stop. All of a sudden, it doesn't look as good. It's interesting. It's gone sideways for a month. There is a way of trading these. Sometimes you can get some pretty big pops. I did a similar trade to this once, and I was fly fishing. I don't even do fly fishing. I got roped into going along and made 202% in a day trading this. This little consolidation. Okay, I'm going to come back to that. So again, we're back at the trend here. I'm just looking at these glitchy lines. Is that something the share does? This is Cineworld. So I would imagine, well, you'd imagine they've taken quite a big hit. These are the cinema companies. Maybe their news is starting to get a bit more positive. It could go back up if they're going to start opening the cinemas again. Let's have a look at this live. Ticker is CINE. Okay, yeah, we've got the bounce again. Interesting. Okay, so it's at 103.78. What I'm going to do on my win wave is going to draw that in. So it's roughly here-ish. Okay. I'm just going to go back and check those mad glitchy bits. Yeah, they are happening. Okay. Could be a trade. We'll put this in a watch list for long. CINE. Couple of stars next to that. We'll go back and look at the very best ones afterwards. Interesting. There's a 20% move in that. We've got quite a big bar here. We'd have to go into a smaller time frame to try and get a risk reward in order. In fact, let's have a look at this on a 4-hourly. Okay, something going on like this. All the indicators looking great. Bit of a big push up here. And again, it can always come back and do a double bottom here. You'll see that quite a lot here. We had a big push up, it came right back. This is what I was talking about earlier, your profit going into loss. It's just doing a double bottom before it goes up, so don't panic. But this could be good. Cineworld. Let's put that into our watch list. Okay, what we'll do, let's take a break. I know some of you are probably falling asleep already. Someone's asking me where I fly fish. I had no idea. It was ages ago. Okay, Cineworld reported yesterday. Well, I'm assuming it was good news, but or maybe it wasn't as well. It couldn't have been good news. They're shut, but it must have been not as bad as people were expecting, I would imagine. Okay, let's take a break. See you back here at 11:45 UK time. I know there's people all over the world watching, so wherever you are, we'll see you back in 15 minutes, and we will carry on looking for UK shares.